Imagine this for a moment. It is January 3rd, 2026. Dorothy is 74 years old. She lives alone in a small house in Ohio. Her husband passed away 4 years ago. She has been counting on this morning for months. You see, last October, Dorothy heard the wonderful news. Social Security announced a 2.8% raise. The headline said the average retiree would get an extra $56 per month. Dorothy did the math at her kitchen table. She thought, finally, I can afford the heating bill this winter without choosing between medicine and groceries. She logs into her bank account on her tablet. She squints at the screen. She refreshes it. She refreshes it again. Her Social Security deposit went up, yes, but not by $56. The actual increase in her account is only $38. Dorothy stares at the screen. She feels her stomach tighten. She thinks, where did the rest of my raise go? Did someone steal it? Did I do something wrong? If you have ever felt that confusion, that sinking feeling when the math just doesn't add up, please stay with me. Because what I'm about to share is the reason millions of seniors woke up disappointed this year. I am June. I am a senior policy analyst here at Retirement Tax and Law Pro. I help retirees just like you understand the financial rules that affect your monthly checks, your Medicare costs, and your retirement security. Today, I am going to walk you through exactly what happened to your Social Security raise in 2026. I will give you the precise numbers, straight from the official CMS announcement of November 14th, 2025, and from the Social Security Administration's COLA fact sheet, released October 24, 2025. Every number you hear today is verified, and please, stay with me until the very end, because there is one hidden trap that most seniors don't know about. A trap involving your 2024 income that could be costing you up to $487 every single month right now. I will reveal it before we finish. Before I get to the numbers, let me tell you about Robert. Robert is 69 years old, a retired postal worker from Florida. He retired 4 years ago. He receives an average Social Security benefit of about $2,015 per month before the 2026 raise. Robert is careful with money. He reads the news, he follows Social Security announcements. So when he heard about the 2.8% COLA last October, he was thrilled. He calculated his raise, $56 more per month, $672 more per year. He even told his wife they could finally take a small road trip in the spring. Then January arrived. Robert checked his account. His deposit went up by only about $38, not $56. He called Social Security, polite but confused. The representative was kind. She explained, "Sir, your Medicare Part B premium went up by $17.90 this year. The new premium is $202.90 per month. That increase came out of your COLA raise." Robert was speechless. He had heard nothing about a Medicare Part B increase. Nobody warned him. The COLA announcement made headlines. The Medicare premium hike happened quietly, almost 3 weeks later. One announcement seniors celebrated. One announcement nobody talked about. And in the end, the second one ate 1/3 of the first one. So let me give you the exact verified facts. On October 24, 2025, the Social Security Administration announced a 2.8% COLA for 2026. This affects nearly 71 million Americans. The average retired worker's benefit goes from $2,015 per month to $2,071 per month. That is a raise of about $56. Then, on November 14, 2025, the Centers for Medicare and Medicaid Services made a separate announcement. The standard Medicare Part B premium for 2026 jumped from $185 per month to $202.90 per month. That is an increase of $17.90 per month. In percentage terms, that's about 9.7%. But it doesn't stop there. The annual Part B deductible also went up from $257 in 2025 to $283 in 2026. That's another $26 out of your pocket. Now let's do the simple math together. The average COLA raise is $56 per month. The Part B premium increase is $17.90 per month. That means roughly 1/3 of your COLA, about 32%, is wiped out before the money even reaches your bank account. And this does not include Part D drug plan increases. It does not include Medigap supplemental plan hikes, which AARP reports were 10 to 20% in many states this year. It does not include IRMAA surcharges for higher income retirees. Now, you may have heard about something called the Hold Harmless rule. Many seniors believe this rule protects them. Let me explain what it really does, because this is the #1 misconception of 2026. The Hold Harmless rule, written into the Social Security Act, says your net Social Security check cannot go down because of a Medicare premium increase. Sounds great, right? Here is the catch. The rule only kicks in when your Part B premium increase is bigger than your COLA raise. If your COLA is bigger than the Part B hike, you pay the full Part B increase. According to AARP's official analysis, in 2026, only seniors whose monthly Social Security benefit is $639 or less are fully protected by Hold Harmless. Why $639? Because $17.90 is exactly 2.8% of $639. If your benefit is even $1 higher than that, you are paying the full $17.90 per month. The average retiree at $2,071 per month gets zero protection from Hold Harmless this year, and there are 5 other groups Hold Harmless does not cover. According to AARP, you are not protected if you are new to Medicare in 2026. You are not protected if you pay Part B by quarterly bill instead of having it deducted from Social Security. You are not protected if you pay IRMAA surcharges. You are not protected if you are in a Medicare Savings Program. And you are not protected if your benefit is over that $639 threshold. Now, listen carefully. I promised you a hidden trap, and here it is. It's called IRMAA, the Income-Related Monthly Adjustment Amount. According to CMS, IRMAA brackets in 2026 are based on your modified adjusted gross income from your 2024 tax return. 2 years ago, if you are a single filer and your 2024 income exceeded $109,000, or if you are married filing jointly and your combined 2024 income exceeded $218,000, you crossed into IRMAA territory. Here is what that means in real dollars, straight from CMS. If you are just $1 over $109,000 single, your Part B premium jumps from $202.90 to $284.10. That's an extra $81.20 every single month, $974 per year. It gets worse at higher brackets. If your 2024 single income was over $500,000, your Part B premium is $689.90 per month. Over $8,278 per year for the same coverage your neighbor gets for $2,434.80. Now here's the trap I want you to hear clearly. Many retirees had a one-time income spike in 2024. Maybe you did a Roth conversion. Maybe you sold a house. Maybe you took a large required minimum distribution. Maybe you inherited something. Maybe you got a small pension lump sum. That one event from 2024, even if your income is back to normal now, pushed you into a higher IRMAA bracket for 2026. And you may not even know it yet. But here is the good news. You have rights and you have protections. According to the Social Security Administration, if your income has dropped because of a life-changing event, you can file Form SSA-44 to appeal your IRMAA surcharge. Approved life-changing events include marriage, divorce, the death of a spouse, work stoppage, work reduction, loss of pension income, loss of income-producing property, and employer settlement payments. If your spouse passed away, if you retired, if you lost a pension, file that form. You may be able to reduce or completely eliminate your IRMAA surcharge. Now, here are 3 exact steps every senior should take this month. Step 1. Pull up your January, February, or March 2026 Social Security deposit. Compare it to your December 2025 deposit. Calculate the actual dollar increase. If it's lower than you expected, the difference is going to Medicare Part B. Verify that the amount taken matches the official $202.90 premium. If it's higher, you may be in an IRMAA bracket and need to check Form SSA-44. Step 2. Visit SSA.gov and download Form SSA-44 if any life-changing event applies to you. Don't wait. Don't assume. Don't be embarrassed to file it. This is your legal right under federal law. Step 3. Call your Free State Health Insurance Assistance Program counselor, also known as SHIP. The number is 1-877-839-2675 or visit shiphelp.org. SHIP counselors are free. They review your Medicare costs, your Medigap policy, and your Part D plan one-on-one. Many seniors save hundreds of dollars per year just by having this conversation. And before I let you go, I want to share one more thing that nobody's talking about. According to the IRS, your Social Security combined income thresholds for taxation have not been adjusted for inflation since 1993. That means that 32-year-old number, $34,000 for single filers, $44,000 for married couples, is still the line that determines whether up to 85% of your Social Security becomes taxable. So if your COLA pushed you over that line, you may also owe more federal income tax in April 2027 on your 2026 benefits. The COLA gives, the IRS takes back. This is why understanding the math matters. This is why one announcement in October and another in November can quietly reshape your entire retirement budget. Please do not rely on YouTube notifications. Do not trust what someone tells you at the grocery store. Do not trust forwarded emails from well-meaning relatives. The only sources you should trust are SSA.gov, Medicare.gov, CMS.gov, AARP.org, and KFF.org. Bookmark them today. Visit them once a month. When in doubt, call 1-800-MEDICARE or your local SHIP office. Your Social Security is not a gift. You earned it. You paid into it for 40 or 50 years, and you have every right to understand exactly where every dollar of your benefit is going. If this video helped you make sense of your January check, please subscribe to Retirement Tax and Law Pro and turn on the notification bell. But more importantly, share this with your spouse, your sibling, your neighbor, or anyone you know who is on Medicare. One conversation today could save them hundreds of dollars this year. I am June. Thank you for spending this time with me. Take care of yourself, take care of your family, and I will see you in the next video.